Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update today about the economy and the investment market so you can better your portfolio. Before I get started today on the updates on the economy and the investment markets, I have some good announcements to make. In fact, we've been in negotiations for quite some time on starting a Resney Wealth Report TV show in addition to our weekly radio show. So we actually have finalized negotiations for a TV show that will actually air throughout the west coast of Florida. We will be in negotiations then for contract negotiations for the east side of the state, but right now it looks like within the next 30 to 60 days we will kick off officially a weekly TV program hosting myself and talking about the investment markets and topics around the investment world and what you should be doing with your money. We're excited about this. We believe it'll bring in a lot of great information to our radio listeners and obviously now our TV listeners and what they should be doing and should not be doing with their money. With that said, we will have further announcements on that via email. We'll tell you exactly what stations we will be on and what times down the road. With the investment markets, we continue to see a little bit of a sell-off in most of the equity-based markets. I talk about our global tactical opportunity portfolio, the fastest horse as we call it, and our indicators continue to show signs of equities starting to slow. Now currently we don't own emerging market equities in our global tactical opportunity portfolios. In fact, we've sold all of those out of our portfolio between the last 2 months and 3 months ago. We continue to shy away from emerging market equities only because of their relative weakness within all the investment sectors. We continue to favor high yield bonds. We continue to favor emerging market bonds. In fact, those are our two biggest allocations within our portfolio. We continue to monitor, obviously, the progress of all the investment markets, but at the end of the day, you have to run a strict rules-based strategy, and you have to follow that strategy through thick and thin, as we call it. If you don't have an investment strategy at all. Now, if we continue to see weakness, and one of the things that we're seeing weakness from is obviously Greece has come back into the limelight, and obviously Europe's in disruption as it's been for the last approximately 24 months. Now, while I don't see any imminent collapse of any of these economies, this further weakness, obviously, in Greece because of the political unrest has caused the markets to sell off a little bit. If things stay where they're at, we will actually exit out of probably all of our equity-based positions by the end of the month if they continue on this track. If not, we may continue to hold some of our equity-based positions, but overall, we are very heavily in various types of fixed income, and I talked about the first two earlier in this video. I would caution investors, if you are not a client, of course, you want to make sure that you are having risk management controls within your portfolio. While I don't think we're going to be headed for a double-dip recession this year, typically that doesn't happen in an election year. Anything is possible. We're going to monitor relative weak sectors. If any of the sectors in our portfolio hit our criteria, they will be sold as we continue through this particular month, or things could reverse. Again, I'm going to stress that the economy, generally speaking, is in an improvement stage. It's a slow improvement stage. Housing numbers came out today. They were a little bit better than they have been. Again, housing starts have been anemic for the last 6 years. There's talk about the housing market bottoming out. I personally don't buy into that category. I think we're going to continue to see further weakness. And what that means is not necessarily another 50% drop in housing values, but I see a stagnation of housing prices for maybe the next 3 to 5 years where there's really no upside potential. What you have to understand is every asset category, regardless if it's real estate, regardless if it's the stock market, bond market, gold, what have you, investment sectors are either relatively strong or they're relatively weak. That relatively weak can continue for a long period of time, as we've seen 6 years in the housing market, and it could continue for another 6 years. So what I would say is the trend is your friend. Watch the direction of any investment sector, and if it continues in a downward track for between 30 to 60 days, that should start to give you some kind of early warning sign that that sector is getting relatively weak based upon other investment sectors. And if it is, you want to raise cash or change into the strongest investment sectors within the world economy. And again, that's not just stocks and bonds. all asset categories need to be encompassed. This is Brian Resney. If you have questions about your portfolio, of course, if you're a client, call our office at any time. And if you'd like to become a client, we always like taking on new clients who want to better their portfolio and better their situation. Call our office for a consultation. And until Sunday's show, make sure you have yourself an extremely profitable week.